Thank you, everybody, for joining today. I greatly appreciate every time we have a workshop or webinar that you guys jump on. It really means a lot to us in the ASNOA University. I'm going to record this session. I don't know if it just popped up at you all, letting you know that it was going to be recorded, and we will put this on our ASNOA training YouTube channel next week, so you can review it later, share it with your team. So we are going to get that up next week for you guys. So if you don't know, the ASNOA University, here in the education department, we are going to offer many different workshops throughout the year. And we want to give you some additional knowledge that's going to help increase the revenue within your agency. So the next workshop that we're doing is going to be in June. So June 21st to the 23rd. And that's with Agency Revolution. And that's all about marketing. So that's something you guys are going to want to also check out, take a look at, register for it. You're going to see that registration link in our ASNOA Advantage newsletter that's going to come out next week, and also in our Education Roundup. So keep an eye out for the Education Roundup, because that's where you're going to find all of these great advantages for our webinars and our workshops. So we want to keep this interactive, so please raise your hand, chat in your questions. Jenna, myself, and Andrew, we are going to monitor the chat as we go along. So please make sure we keep this interactive. Don't be thinking, oh, what, I'm just going to write this down, I'll ask it later. No, just throw it in the chat so we can address your questions as we go through. So this is a 2-day workshop. So today, from 2 to 3:30, Brent had said it may not take that long to go through his presentation, and it's going to be all about what is wholesale. And then tomorrow it's going to be the same time, so keep that on your calendar. And we're going to talk about where can you get that help you need to issue this wholesale business. And we're going to tie that all up into My Live with Laura. That's on May 24th, where it's all about commercial lines. We're going to go through marketing submissions, doing certificates of insurance, and entering those policies into Epic. So you're going to want to register for that. You'll see an email going out in our Education Roundup. You can also go to asnoa.com, go to the ASNOA University landing page, and you can click right on Live with Laura and register for that next session. That is May 24th. So today, day one, we're going to talk about understanding the difference between admitted, non-admitted, and excess surplus lines. We're going to learn how to use these markets versus the standard lines. And we're also going to explore how to use specialty lines and know where and when to use the marketplace. And what better people to join us today would be Nationwide Brokerage Solutions. So thank you, you guys, for jumping on today. I greatly appreciate you putting on this workshop for our group. And today presenting, we're going to have Brent, and Brent's going to be our presenter for today, and Jenna and Andrew are going to be for tomorrow. So Brent, if you would like to unmute yourself, tell us a little bit about you.
Yeah, Laura, thanks so much for having us today. And I want to start out with, if you can see me talking in the screen, Jenna and Andrew on my team know very well the sun and this window is just set up perfectly to constantly have light coming in. So I apologize for kind of the bright light in the background. But appreciate you having us today. Just a little bit about myself. I've been with Nationwide since 1992. They purchased a company called Allied Insurance in 1998, and I had been working there as an underwriter out of college and came into the organization that way. My career has spanned pretty much across the property and casualty underwriting spectrum, as well as the sales and business development spectrum in the company. I've done desk underwriting. I have managed a personal lines underwriting team that did book rolls and transfers and things like that. On the sales side, I was a territory sales manager in Iowa, and then actually had the opportunity to lead a sales team in 4 states of Indiana, Iowa, Wisconsin, and Minnesota. So a lot of the states that many of the member agents of this group may have been in, and heck, maybe I've even seen you in your office. You never know, back in the day. So those are the states I worked in. And then back in 2012, I had this opportunity come upon my from a man named Gary Baker asked me if I would be interested in looking into working on the brokerage side of the house at Nationwide. And I was familiar with the internal brokerages of Nationwide back in the day. There was a independent brokerage called Allied General Agency. And then for the exclusive channel agents at the time, they worked through the internal brokerage in Columbus called Insurance Intermediaries Incorporated. And having worked on the retail side of the business, I always was, I oftentimes would refer things to the brokerage, but I never really quite knew what went on in the brokerage. I thought I did, but once I started working here, I realized that this is an entire, just a huge world of insurance that's out there that I probably honestly took for granted that even existed. So I came on board in the brokerage in 2012, 2013, working at the Allied General Agency, managing that office. And then when we blended insurance intermediaries and Allied General into Nationwide Brokerage Solutions, we sort of shifted up positions and built a former business development team. And that is what Andrew, Jenna, and I work on today. And you'll hear more from Andrew and Jenna over the next 2 days. Excited for their presentation. But my job here today is to basically sort of present a 101 on the wholesale excess and surplus lines, wholesale broker, specialty marketplace, specialty lines marketplace, if you will, and how that is distributed across our industry. And so what I'd like, I would like to start out, I'd like everyone to just kind of take 3 things away is if you're unfamiliar with this area, you'll have a better understanding of where wholesale brokers and MGAs and GAs fit in the insurance spectrum. Secondly, you'll kind of learn a little bit of the nuances of the E&S world, the excess and surplus lines world, and what goes with that. And lastly, I'll have a little bit of a precursor of how NBS fits into this world, which will be a great segue for the next 2 days when you listen to Andrew and Jenna. So extremely excited, and thanks for having us again, Laura.
Thanks, Brent. I remember those carriers that you worked for before. So if other people may as well too, with Allied and Allied General, a lot of things going on here in Nationwide. So Andrew, do you want to introduce yourself?
Thank you, Laura. So I am Andrew Markley, and as Brent mentioned, I am the Director of Business Development at Nationwide Brokerage Solutions. It's kind of funny how small the insurance world is. Brent and I were sales managers together back at Allied. He being in Iowa, I was in Northwest Ohio. And my career started going slightly in a different direction, left Allied and came to the Nationwide side of the house and was actually in their training and development department, teaching newly appointed agencies and sales managers everything there was to know about commercial insurance, from the very easy all the way to the really complex. And that's where I first met an executive by the name of David Schmidt, who was the leader over insurance intermediaries back in the day. That was my first introduction to the world of brokerage. And it was actually Mr. Schmidt kicked me out of the nest and encouraged me to go after a position at an excess and surplus lines company, Century Surety, who was looking to build a marketing department. And the joke is I got to spend 10 years out into the wild with Century Surety. I was with Endurance for a period of time. And then prior to my return, I was running a wholesale insurance agency in South Florida that had a retail agency wing, that had an insurtech, that had their own carrier. It was really kind of an interesting small conglomeration. But Brent and I reconnected over LinkedIn one evening as I was looking to make my way back to the Midwest, because South Florida is lovely to visit, but it's just not for me to live there. And Brent told me about an opportunity. He was building out a new team and was trying to do some different things at NBS. And it was an opportunity to reconnect with an old friend, but also be part of kind of the ground floor of something really big within the organization. My career, like I said, I was a sales leader for a period of time. I spent a couple of years as a retail agent. One of my companies that I sold for lured me to the dark side and said, underwriting is a great career. Everybody thanks you for what you do and you never get yelled at. And I believed everything they said. And that's what brought me to the company side. desk underwriter, all the way up through a regional vice president at Century Surety, overseeing underwriting operations. So kind of been a little bit of everywhere within the insurance industry from a sales and underwriting standpoint, and have been able to develop a knack for helping agencies place business that otherwise might be a little bit difficult to do. So I'll be spending some time with you guys tomorrow to talk about all things NBS and how we're set up and how we can plug into your agency and help you guys write new revenue coming into your organization. So thank you, Laura.
Well, thank you, Andrew. You guys certainly have a whole bunch of knowledge for our group today. Very excited to have you on board. And Jenna, would you like to introduce yourself and tell everybody what you can do for our group? And you're muted.
Sorry about that. Hi, everybody. My name is Jenna Otzaparti. I started my career at Nationwide in 2018 in the Life Solutions Center at Nationwide Financial. I started out as a representative, and then I progressed into life sales, where I earned my SIE and Series 6 license. And then shortly after that, in August of 2021, I came over to NBS, where I'm a senior analyst in business development, working with Brent and Andrew. So I'll be more of your onboarding specialist and help you with navigating our website, utilizing all of our resources, and happy to work with you.
Well, thank you, Jenna. We're excited that you're here with us and you're going to be able to help onboard our team. So Brent, if you would like to share your screen.
All right, let's give this a try.
Yeah, great. And you can get started. We're eager to.
We rehearsed this, so it should go pretty smooth. Let's see. All right. Let me know.
We can see your screen.
Okay, great. So can we get going then? Are we ready to roll, Laura?
We are ready to roll.
All right. And just to verify, no breaks, right? Are we just going to go straight through?
We're going to go straight through.
Okay, great. So grab your waters, folks. I've got mine and my Dr. Pepper Zero. And I'll start out by saying, wherever you're at, I know there's many states represented here, but hope you're having a great day. We were just talking before we started about how the weather, and I'm in Iowa right now, and the weather has done a complete 180. I went from full on, basically, like rain, cold gear baseball coaching last week, 2 weekends ago, to this past weekend being in shorts. So crazy. But this is going to be 101, like I said, in understanding the wholesale brokerage marketplace. And that kind of wholesale brokerage marketplace is going to encompass a variety of different things, as you'll see through the presentation. Primarily, the term brokerage is just thrown around. It can mean all sorts of different things in the insurance world. But for points and purposes of this presentation, understand that wholesale brokerage, I'm referring to what I would call not retail agencies. You are retail agencies. You are facing the customer, insuring, them with the carriers you represent. I like to use the term, the wholesale brokerage marketplace is sort of the agents for agents. That's where you go to write stuff that you may not have a direct relationship with a carrier, or it's in that, again, excess and surplus non-admitted marketplace that you can't access by yourself without one. So again, we'll explain that. But excited to get rolling here. I'm sorry if some of these slides are maybe remedial, but I think we have maybe a broad range of folks that have experienced working in the wholesale brokerage marketplace. I find often a lot of agencies that are pretty much focused on personal lines, life, and small commercial don't need this marketplace very much, or they may just be starting to dabble in it. And so their knowledge of how to work in this space is limited, all the way to the other side of the coin, where you might have agents that are used to doing a lot of middle market commercial, or by virtue of geographically where they're at, they have to use the wholesale brokerage marketplace just because of the challenges with the risks in their geographic location due to whatever challenges you might be facing, whether it be coastal, wildfire, things like that. So that's where we'll start out at. So I apologize if it's a little remedial, but I think it will benefit everybody. And again, the slides, this is more of a, I'm not trying to be a big marketing splash here for NBS. This is more of an education thing. So I built these slides kind of myself. I'm by no means a PowerPoint wizard. So I tried my best with my graphics, but I think as I explain through it, it really lets people walk away and knowing, where everything fits. So without further ado, we'll get rolling here. So what I want to start out and talk about is when you look at this blue bar with arrows on the end, let's pretend this is the entire, world of property and casualty insurance. And the left side is what I'm going to say is the less complicated, lower exposure risk. So for example, let's say the far left, the most simple, easiest, low exposure. Let's say somebody with a super great credit score on an HO4 that has nothing of value and lives a very, very careful life. So they're not going to have a GL loss. They don't have a lot of property. It's an HO4, low premium, very low exposure. So that would be an example of something very, very simple on the far left side. And then as you move along to the right, we're going to talk about, this bar is going to be on every screen. And as you move along, you'll see how things fit together. But, let's just move along. After, an HO4 policy, we move into actual HO3s and HO5s with families and autos, and they may add umbrellas to that. You start working in the commercial world, you're writing business owners policies or BOPs, you're writing strip mall type business, whether it be, an ice cream store or a, retail and service, any type of fairly benign retail and service operation in strip mall business. Moving along, homeowners and personal lines, you get into that high net worth space. That as well, that gets more complicated. You're looking at people with large schedules, they need higher limits, they have seasonal homes, they have, high value cars, things like that. We move into keep going down to the right, you see middle market, bigger, larger commercial, your distributors, your higher end commercial contractors, your electricians, your plumbers that have multiple vehicles, things like that. Keeping down the spectrum, we get into even larger commercial lines. Now we're talking about, maybe multi-state businesses, manufacturers. They actually manufacture things. They have factories, lots of employees. As I said, maybe across the whole entire United States. I put HPR in here. That stands for highly protected risks. Those are going to be your large commercial lines that, that a lot of people say things that can explode or things that are if something goes bad, there can be a really, big loss. I think of in Iowa here a long time ago, high fire, there's a large fire loss in the Quad Cities, and everyone thought, well, it was just a warehouse. Well, this warehouse was attached to Goodyear, or it might have been Firestone. I can't remember which company it was that made the tires, but they housed a ton of their tires there. And well, once that caught on fire, you can imagine what a warehouse full of tires did. So highly protected risk means, definitely potential for a large loss. You need intense loss control. Loss control representatives for HPR risks typically have engineering degrees, things like that. International exposures can start coming into play as you move down the spectrum. I put specialty lines down to the right. That's probably specialty lines, as we'll find out, can actually probably be plopped in here throughout the whole spectrum of the risk. Of the risk spectrum, just because it just depends. But I put it here on the right because a lot of times specialty lines is just that. It's not, as you'll see later in the presentation, specialty lines are not typically covered under your GL or your property policies because they're unique and they're different and they may be higher exposure. So that's why I kind of put it here in the middle right of the marketplace spectrum. Once you get past here, you start seeing where I show, distressed risks from the admitted side, and you'll see what I mean by that shortly. But anything that starts getting distressed from claims, they have multiple claims. Maybe the condition isn't horrible, but it isn't the best for a preferred company to really be interested in writing. And I'm trying to get down. I can't see my next. Oh, yeah, because it says talking Brent Messlizer, it's blocking part of my presentation. It's unique risks. This is the next thing on the right, and Lloyd's Marketplace. So unique risks, Lloyd's Marketplace. This is where we're talking extremely unique. Something that is, you've all learned as you've gotten your license, what's the perfect insurable risks, right? Well, a unique risk there's not very many insurable units is not the most desirable insurance risk that's out there. It's extremely unique. And, a policy might actually have to be built specifically for this, or, there's, coverages may have to be modified, exclusions might have to be added, things just get different because it's so unique. And then obviously Lloyd's of London, the Lloyd's marketplace is where a lot of these really unique risks end up if they're super, super unique. You use that old example of, hey, I've got I'll use a baseball analogy. You want to insure a major league pitcher's arm for a year to make sure, it doesn't get hurt, or a large fleet of automobiles crossing a dangerous part of the ocean that may be in a, possible wartime or something like that. How are you going to insure the freight of that ship crossing the ocean? That's where you start getting super unique, high value Lloyd's marketplace. So that's where that kind of falls. But that's the best, in my opinion, that's kind of the world we write in the property casualty as you go across. So when you read my bullets there, that's the sample. You'll see as you move towards the middle, obviously tougher middle market commercial risk, high net worth personal lines, large construction verticals start getting written. Specialty lines with higher limits and exposures evolve as we move across this. So what you're going to see next when I flip the page, this is where I'm going to go here. This is where you, as the retail agent, come into play. You can see up top the admitted insurance marketplace. That's what this is, admitted, meaning the carriers go direct to the retail agents and sign contracts with you. They work with your insurance departments in your states and are an admitted insurance company in that state. This is where retail agent brokers write business in this market space. They have direct contracts with the admitted carriers and write them in for standard and preferred risks and sell them to your customers. The green little line up there, that is kind of where most of the admitted marketplace falls. Less complicated all the way to somewhat more complicated and high exposure, just depending on the loss potential. And when you look at where the admitted marketplace works here, what I want to make clear is just because it's admitted doesn't mean a wholesaler can't access this marketplace either. But for retail agents, this is exactly where they play. You do not see retail agents jumping over and getting contracts with carriers that write to the right. You'll see later in the presentation that's possible, but they pretty much have to form their own brokerage and have almost like a separate division or a separate company under their carrier umbrella, under their umbrella of companies or whatnot. So again, to recap here, here you go. You're going to have contracts to write your typical home and auto, your small commercial lines. If you're a large enough retail agent, you might have a high net worth personal lines company or two. And you might have some carriers that are writing in that larger commercial space as well. So I'm going to stop here and go into what's called what is non-admitted or excess surplus lines. What do you mean, Brent? I mean, what's going on with this? You just showed me, that spectrum with retail agents writing business in that admitted space. So what it basically means, I mean, I didn't go into a ton of detail here, but in a nutshell, policies that are written through a broker with a non-admitted carrier in a state. And what I mean by non-admitted, they're carriers that are not regulated in that state the same way as admitted carriers. So they're often, sometimes you might hear the insured alien insurer, meaning they can write business in that state, but the state is saying, hey, you're not regulated in quite the same way as our admitted carriers. Now they're regulated, don't get me wrong. I mean, it isn't like the state's, just do whatever you want company. There's definitely, you'll see insurance departments investigate complaints on non-admitted risks written through brokers. But it is not as regulated as a state that or an admitted company. And what this allows is more flexibility for the carrier to have their rates be more flexible, their coverages can be more flexible, and they can underwrite to accommodate more difficult risks and exposures. One thing out here as well that I'll mention is they're also not as the risk here is they're also not necessarily covered by the state guarantee fund. So, you know, the state guarantee fund is out there to help protect insureds if a company should go belly up or bankrupt, or not bankrupt, or not able to solve their losses or to pay their losses. So there's not as much guarantee out there as there is with admitted companies. So that's why a lot of people think, oh, a non-admitted company or a surplus lines company is a bad carrier. And that's completely false. Nationwide owns Nationwide excess and surplus lines. I mean, it's rated just as Nationwide is rated by AM Best. But because these companies are, you know, writing risks that may be a little more difficult or have more exposure, it is very important to make sure that if you're placing business through a broker with a non-admitted company, that it is a good rated company, so that, you know, if things, you know, kind of go south on the claims front, they have the ability and are well capitalized to pay their claims. So that's in a kind of the, you know, what I would say the core definition behind why they're called non-admitted or excess surplus lines. They're surplus to the preferred admitted market. The reason, so the next bullet where it says written by retail agencies through an intermediary. Intermediary is just a general term for all the people, you know, the wholesale broker world. We're intermediaries in between you and these carriers. And so what we do that's different, and why you have to have a special surplus lines license to work in this world, is for one, we file the surplus lines tax or the premiums taxes with the states on the policy. So when you get a binding agreement through a broker that's on a non-admitted company or a surplus lines company, you'll see the premium rate, maybe a policy fee, and then they'll actually line item that tax. We're responsible for that. In the admitted world, the premium taxes typically are built into the rates. You don't even see them. They're built into the rates with the company, and the company takes care of that with the state as far as filing taxes. We do that for the company as a broker. Another thing with the intermediaries, they may or may not have underwriting authority. And in our world, we define this. If you hear this in this marketplace, you'll hear when we say, "Hey, I have to send this. We have a brokerage market for this," or "Oh, I have a binding authority in this market for this market." And we're a broker, yes, but when we're talking our language, when we say, "Oh, we have a brokerage market," "Oh no, this is great. We have binding authority for this class of business." What that basically means is when we say binding authority, we mean we have the underwriting authority. We can oftentimes just bind that right at the desk, issue it, and boom, send it to the agent. If we have to go to a brokerage market, that means we have to go to one of our carriers where we don't have binding authority. And that can take a little bit longer because we have to take the application to our carrier. They have to look at it, they underwrite it, they come back to us, we come back to you, and that's where you get a little bit of that time. You know, sometimes where agents complain about brokerages because, oh, it takes so long. Well, it's because oftentimes, depending on how good information we get from you, or, you know, how much information the underwriter may want after the fact, we have to be the deliverer of that message. So we're going back and forth between company, us, agent, to try and get it right. That's brokerage market. Binding authority, we have the underwriting guidelines up to certain limits, you know, for certain classes. We're able to just go ahead and issue that and send it off. And what happens with that is we'll get audited periodically by our carriers that give us binding authority, and just to make sure that we're following the rules and applying the underwriting guidelines that they would like applied. So with binding authority, I wanted to go ahead and define what comes into this space. You often hear these terms are so interchangeable sometimes, but there is some definition around them. The popular one I'm hearing these days is when you have binding authority with a carrier for a broad spectrum of classes, and they grant you that contract, they'll call you a general agent. a GA. It means you have underwriting authority, you can issue it at the desk. Oftentimes, we'll also say, oh, we're an MGA, we're a managing general agent. Kind of the same, but in the if you really truly look up the definition of MGA, a true MGA is possibly going to have a little more control over what goes on in the program or in the class of risk. They might have, as I say here, claims settlement authority. They may partner much more with the carrier in developing rates and underwriting guidelines and whatnot. And they may even evolve into a true MGA program manager, which is my next bullet, which is where they kind of are anointed the broker that can handle that class or that type of business. And no other broker can access that class through that company. I'll give you an example here. I'll kind of give you an example using the nationwide companies. We have general agency authority with Nationwide E&S. And that's great because they cover a great large spectrum of commercial classes. We can issue them. We don't have to wait for the carrier to get back to us. However, when it comes to there's another broker out there, Virtue Brokers, that writes on Nationwide E&S paper for pollution, but they're a program manager. They manage this pollution program, and they're the only ones that really have the binding authority to do that. Now, we can access Virtue and submit a risk to them, to their program, and write something with them, but we do not have, we have to wait. They're the ones that have the actual binding authority and approve it because they're anointed specifically for that program. So if an agent comes to us with a pollution risk that qualifies for Virtue, we send it to them, but so that's going actually agent, NBS, we go to Virtue, the program manager, and then they basically have the authority on the companies that have to write it. So that's kind of a 4-step process. And program managers kind of fall in 2 buckets. Some program managers, depending on how complicated or what the risk type is or what their program is about, work only with other wholesale brokers. So retail agents still have to go to a broker to get to the program manager. Other program managers will go straight to the retailers. In that case, it's somewhat of a waste of time for us to go to that program manager. We'd often refer a retail agent straight to that program manager or that broker that manages that program. So I know it kind of sounds confusing, but you can have a broker like us, like NBS, possibly get anointed as a program manager for some line of business or some product, some class of business, and all of a sudden we become exclusive to that. And then it just depends how we would want to distribute that. Do we want to go straight to retail agents like yourself? Or do we want to say, I don't know, the retail agents may not have enough horsepower. We're going to aggregate it under the brokerage distribution model. But that is kind of the world of binding authority. So, but for all points and purposes, what you need to know is that when we say we got to go to a brokerage market, it's just going to maybe possibly take a little bit longer because we can't just approve it right away. But in binding authority, we can. And Andrew and Jenna will definitely go into the different areas of NBS and show you all sorts of neat things we have out there on our website to help you get rate indications on our binding authority markets as well. So more to come on that. But just kind of wanted to let you see what the world looks like from that standpoint. Something you have to remember, my last 3 bullets are out here purely, as I said earlier, I want you to kind of understand some of the nuances of the E&S market space. It's a little bit different. Binding, oftentimes, with most brokers and most E&S companies, has what they call minimum earned requirements, meaning as soon as you give us the authority to bind that business, 25% of that premium is fully earned. So there's no going back and canceling flat, in other words. So the reason I'm bringing this up is because you need to be, especially if you're quoting somebody that has, if you're the only agent working the risk, it's not quite as much of a worry. But if they're maybe shopping with other agents and this risk is kind of on the cusp of going into the preferred standard markets, or if it's fully E&S, you're okay. But if they're shopping it somewhere else, and you need to make sure that insured understands, hey, if I bind this in the E&S market with my broker, you're going to owe 25% of this premium. But if the agent down the street maybe has a couple more admitted markets that they have direct contracts with that may say yes to it, and they say yes after the fact, you're still going to owe 25% to me. So you definitely want to make sure a risk is ready to go to the E&S market, and that way you won't have a problem here. But to give you the worst case scenario, you bind a risk with us with our E&S market. So maybe it's in one of our carriers, like Andrew mentioned, Century. We have them. We place it with Century, and then the insured calls you the next day and says, you know what, I don't need that policy. The agent down the street just quoted me with this other carrier they have, and their underwriters were okay with the fact that they had 3 losses in 2 years, and they're going to write it. Well, unfortunately, we already bound it. So that's where you got to be very, very careful. Make sure the insureds understand that, and that you do your due diligence on making sure there's no admitted markets that will write it. And I didn't put this as a bullet. That's why you'll see in almost every state that you have to list. Usually it's 3 carriers that were preferred that declined it. So when you have your stock of carriers with ASNOA, Nationwide underwriter said no, Travelers underwriter said no, Auto Owners underwriter said no. There's 3 no's. The insured is being canceled by their current carrier. That could also be a carrier that's not willing to write it. So you're pretty, you're safe, fairly safe going to the E&S markets at that point. In addition to the 25% fully earned, typically it's always agency bill, and 100% is often due up front, if not all the time due up front with E&S. So they have to pay it in full. This is where, if you've never encountered premium financing, basically it's no different than you're financing the premium just like you would finance if you bought a furniture set at a furniture store. We send a financing packet out with a finance company that we've partnered with here out of Des Moines, Iowa, Insurance Finance Corp, or IFC. We found them to be a very good finance company. They have a competitive rate for the situation, and most of all, their customer service is very good. It's very good. They have a very personable customer service team, and that's why we like them the most, because agents are able to call them and talk to a person and work with them if something should come up with premium financing. But it doesn't mean you have to use our financing. You don't have to use it. If you've got a partner with premium financing, you can use them. You can use whatever you want. It's just out there because a lot of agents haven't done it a lot, and they don't know what it is. And what happens is that way you can do that. They will pay the 100% premium, and then the premium finance company will then send installments to the insured to pay it monthly, to kind of make it similar to an admitted policy where they're paying a monthly direct bill. It goes to a finance company instead of the carrier or us doing it. So again, I hit again, binding likely will have minimum earned requirements, 25% fully earned upon binding. I put it in there twice because that's very, very important. And then my last bullet, when it comes to non-admitted and excess and surplus lines, I'll re-reference my 3rd bullet of allows more flexibility in rates, coverages, underwriting to accommodate difficult risks and exposures. If you don't read policy conditions and exclusions and endorsements on your admitted business, you should very well start reading them on E&S business. Oftentimes the policy forms are very, very similar, but because of the ability for companies to change some things to be able to write these unique risks, they can exclude things. There may be lower limits. Deductibles may be different or higher. So just read through your policies. Be very careful to make sure you look through your endorsement page to check out what endorsements are on there, what exclusions are on there, and read your policies. And you can also call your brokers and talk with them anytime to see what's going on there. I'll share a story here. This is my favorite story on this. I'll always read policy conditions, exclusions, and endorsements. It centers around a restaurant that was on water, not on the ocean. I believe it was a river, and it was the typical kind of boat party bar and restaurant. It was a popular E&S class. It was a bar restaurant, kind of on the river, but away from the city. I don't know if the protection class was great, but whatever the reason, it had to go E&S on the E&S markets. And so the concern was they also had a gas dock and things like that. Well, they wrote the risk pretty much the same as if any other company would write it. But the one thing they were concerned about, and what also the admitted preferred companies were concerned about, was the gas dock. And the only way this risk could end up being written was if they excluded perils of the sea. So, floating objects down, obviously flood is excluded, but, a peril of the sea would mean a boat, crashing into it, or, a large stump or something like that coming down the river and crashing into it. And, so they're willing to cover it if something, major happened, if a normal fire happened, but they know that the popular thing that could happen a lot would be things crashing into the dock. And they were not willing, even the E&S company was not willing to write perils of the sea on that. So just an example, you'll see of how they can kind of change things to make it more acceptable for them to write. But also, unfortunately, it can also be something you have to explain to the insured that, you may have to self-insure some exposures for part of it. So I'm going to stop here because I've been talking for about 25 minutes or so and see if there's any questions.
I don't have any questions that Andrew hasn't already
Okay.
answered in the chat. So I think we are good to continue.
Okay, awesome. Let me close my chat thing. All right. So moving along, I'm going to go into specialty lines. Very loose term here, specialty lines. Specialty lines, I use this. This is the line of business for any type of coverage that, typically you won't see in the ISO, GL form or property form, just because it's so special. It's such a unique situation. You got to have a separate policy for them. So let's look at some examples. Pollution liability. You have your pollution exclusion out there. Obviously, how do you cover pollution? You have to go get a pollution or an environmental type policy to cover pollution. Things like underground tank, we see overspray in the ag world and things like that. That's where, and that's not technically pollution, but it's a negligence loss, but it's something that's excluded oftentimes on the farm liability policy. So they have to go out and get a spraying, something specific to spraying. Products liability is huge. Obviously, products liability for manufacturers, and it just depends. Sometimes the admitted carrier that's writing the GL, I've seen included products liability. Sometimes they don't. It just probably depends on what they're making. But if they need a monoline products liability policy, that's something a lot of agents will go to brokers to access markets that can get them a products liability policy. Management lines, the popular one. This is what you're hearing mainly because of old number 3 there, cyber liability. But you'll hear people talk management lines, and what I've been seeing in the industry, basically when we say management lines, that means those 4 coverages there: employee practices, D&O, directors and officers, cyber liability, and professional liability. A lot of the carriers we have will write all 4 of those things that specialize in those management lines. And I just wanted to put a few also out there that are not necessarily liability related. Like obviously, liquor liability is a liability type specialty line product, but it also can mean, it doesn't mean just liability. It can mean a product, or physical, property type thing as well. Jeweler's block is a example of, covering jewelry. Animal mortality, you'll see us write the individual animal, like maybe the high value cattle or equine, for a horse, to the herd type coverage where it may not be an individual animal that's high value, but it's the stock, and they need, a large dollar amount on multiple head of cattle or hogs or whatever. So, or animal mortality is something that you might have to write separately. One thing I want everyone to remember about specialty lines is it can be admitted or non-admitted. And this is where I like to point out brokers, just because we're a broker doesn't mean we only do non-admitted excess and surplus lines stuff. We also will do it. There's markets we have that do admitted. the reason agents still have to come to us for admitted type products, high net worth home is a great example of this. High net worth home is an admitted carrier, but the reason brokers are so popular in high net worth home is because a lot of times individual retail agents just don't have enough high net worth homes in their immediate area to ensure to satisfy that contract. So the wholesale brokerage world aggregates the distribution of high net worth home products to make it easier for those carriers to get to a mass number of agents, a large number of agents to ensure. And then they're not, you don't have a salesperson beating down your door on, hey, why'd you only write 3 homes this year? And you're like, well, I'm in a town of 20,000 people. There's not that many $5 million homes here. So that's a great example of why brokers also play in the admitted space. We're going to go into a little bit of how the size of agents and who can kind of garner the contracts. Basically, the bigger the agency, or I'll use ASNOA as a very, a large network, you will garner that's one of the benefits of being part of ASNOA is the mass you create as a group will attract, more carriers to you. So you don't have to necessarily use a broker. But high net worth home is a space that you see predominantly accessed through the brokerage world. Specialty lines as well. I'll give you another example of where it can be admitted or non-admitted. Products liability is a great area of this. We have a carrier that has, carriers will often have their admitted paper and non-admitted paper. And products liability, I had a situation where we wrote, the risk was actually they made sprinkler heads for fire suppressant systems in large buildings. So again, a very, if something fails on those things, you're causing, the thing doesn't go off and the whole place burns down, huge exposure there. That's the type of product liability that's going to be on a non-admitted paper. There, you have to go non-admitted for that one. Now, somebody that's manufacturing golf tees, probably not a big deal. That might go on their admitted paper for golf tees. So it just depends how dangerous the product is that they're making and what that product can do from a large loss or a class action suit or something like that on where the carriers will place it. But I just wanted to hit on that, admitted or non-admitted. It just depends on the risk, and that's why you'll see brokers accessing both admitted and non-admitted markets.
Looks like we have a hand up here, Brent.
You bet.
Hey guys. Hey David, I'm going to unmute you. Hi David, do you have a question? David, your hand was up. I unmuted you if you would like to.
You there?
There you go. Hi David.
Okay.
Are you there, David?
I am.
Yeah, did you have a question for us? Your hand was up.
Yes. Can you hear me okay now?
We can.
Okay, great. Well, I've got a couple questions. One starts out with the high value homes. Can you tell me what markets that we have available to us on the high value home side? I know we have Chubb, there's AIG, there's a couple other ones out there and I know we have Nationwide private client. That's one that we really haven't dipped into much. We really, shame on us, we should.
So I'm hearing you say when you say you have, you mean ASNOA or your agency has that direct?
We do, but we have not really quoted it much, and shame on us for not doing that. And maybe it's because it's kind of out of sight, out of mind. We really haven't engaged in it. We really need to be.
Yeah. Well, I'll just share with you for NBS and this will be, I'm kind of probably foreshadowing or taking a little thunder out of Andrew and Jenna in the future, but we do have our 3 high net worth homes, or you just named them, Chubb, AIG, and Nationwide private client. So, and what I've noticed with some, like, I know with Nationwide private client and others, they with networks, they may be a little choosy sometimes. They might give some agents a direct contract and others not. So we've got situations with networks where some of the network members have direct access to their private client companies, but other network members don't. So then they have to come to us. So it just depends on how it's set up, but obviously if you have them direct, you definitely want to use them, but those are the 3 that we do have if you don't. And nationwide private client is not in all states.
How about Vault?
What's that again?
Vault, I think it's called Vault.
We do not have vault.
You're not, okay.
Nope. Nope.
Okay.
Or peer. Nope.
Okay, and second, I'm not sure if you went over this, I kind of jumped in a little bit late. Supplemental applications.
Mhm.
And that's why I'm getting so gray, supplemental applications. I got a quote the other day, I needed 4 supplemental applications. They were 4 pages long each. Half of them asked the same exact question. Is there a go around with supplementals, and what is the reason why there are so many supplemental applications to a quote?
Well, to answer that question, I would tell you, I mean, and Andrew, having been on the underwriting side, I might have him jump in, but I'm going to take a stab at it. One is I would ask the question of your broker, if they're that similar, why are they needed? All 3 for the same risk, if I hear you correctly.
Yes.
But to answer the question why they're needed, and again, when we talked about going to brokerage markets, so, you can send the Accord apps in, but they always have more questions in E&S. It seems like I'll use lawn and landscapers. It can be fairly simple, but they're gonna, if you're a northern Minnesota agent, let's say, they want to know more about your lawn and landscape business because they want to know if you're doing if you're doing logging up north, which is an entirely different exposure and things like that. So they're just trying to find out exactly everything that's going on, and they're just a little more. I hope it doesn't come off as untrusting, but it's more just they're verifying because they are taking a stab at a tougher risk than why it's in that marketplace. Andrew, I don't know if you have anything else you would add, having ran Century's underwriting team.
Yeah. So a couple of points here. So with supplemental applications, when you see the same questions on different forms, like Brent said, ask your broker if you can just recycle or reuse the same app with multiple companies. Most carriers will accept another company's supplemental apps as long as their answers are addressed. Now, with the wanting to know more about what's going on with a particular account, this is where the non-admitted world gets into the deep end of the pool, and we'll kind of jump off a path here. Today, if you write a BOP for a flower shop, and that flower shop also started doing a bakery out of the back, food poisoning happened and whatnot, that food poisoning loss is going to be covered even if it's a flower shop and was rated as a flower shop, because they use what they call the comprehensive GL, or a comprehensive business owner's policy form. In the excess and surplus lines, or the non-admitted realm, many companies will use what they call a class code limitation endorsement. And that means if you are a flower shop, then you are going to be rated as a flower shop, and anything that is not done by a flower shop is automatically excluded from coverage. So what they're trying to do is make sure that they have a good idea of what's going on with that account, somewhat to protect themselves, but also to protect you, the producer, because if they see, hey, there's a bakery here as well, they're going to want to make sure that they get that code added to the policy with the exposure basis and whatnot. We're kind of going like into the deep end of the pool there. Flower shop and bakery is probably not a great example. Brent's landscaper and somebody doing logging, that's what that safety net would be there for. Does that make sense?
Yes. Yes.
Cool. Yeah. Underwriters hate supplemental apps as much as agents do. Well, maybe not as much. But it's things that they have to be able to run down the list, because some of these types of classes of business get to be rather intricate, and they're trying to check boxes on their end to make sure the reinsurers are happy that the company's doing a thorough job underwriting.
Thank you.
Thanks, David, for the questions. Anybody else have any questions? Yeah, that was a great explanation.
Thanks, David. I'm going to end this slide on two notes. One is unique coverage may not, it's unique coverages. Obviously, you see jewelers block, it's associated to jewelers. Management lines is kind of one of those lines that are needed on a lot of risk, and cyber, that's the Wild West. I mean, if you're a coffee shop and you have a they can log into your coffee shop and order coffee and sit in your coffee shop and be on their computer. You have a cyber exposure possibly. It's getting more and more, but some risks are not necessarily needing a specialty line policy. I'm just saying it just depends on the risk and if they have something unique to them that they need. In my circle off to the right, I just thought this would be cool after the end of this section to highlight on why you as an agent should, number one, get comfortable with a broker that you're using and get used to using them, whether it's because you like the service, compensation, whatever, your comfort with the broker. It's because it's not going away. The AM Best report, this is on 2020 numbers that came out in September 2021 on the AM Best market segment report. This market space was only $8 billion in 2000, and it was 66 billion at the end of 2020. I don't know what it ended 2021 at. The market. This report doesn't come out till September the following year. But it grew 17.5% from 19 to 2020. That's $10 billion almost. It's a growing space. You'll see later in a slide, just market conditions, things that are happening. It's going to become more and more popular. And this $66 billion is basically is in the non-admitted type world, in that binding space, true brokerage space, like I mentioned earlier, specialty line that's not admitted, and the Lloyd's market space. That's what that 66 billion. I want to say the entire U.S. insurance industry is around 700 and some billion dollars. So it's almost 10% of the entire industry in the United States. Going back to this is kind of to recap. I want to kind of go back to our little market space spectrum here. So hopefully you understand what I'm showing you here. You see again the green line where you as a retail agent can work. And then as I mentioned, E&S is not necessarily over on the right. It expands. That red line goes all the way across, because technically E&S can drop into any of these areas if it needs to. If it's distressed from that's basically what this means right here. If it's distressed from the admitted side over on the left, it becomes E&S. And so that's why brokers, wholesale brokerage, MGA program managers, that's why we access the entire spectrum, which is the whole point of my big circle here, as you see. But we also may have access to markets that smaller retail agents cannot obtain contracts with due to the retail agency's size and inability to feed these carriers. As I said earlier, example, high net worth homes, just to hit on that. So making some comments here, as retail agents become larger and have more geographic span, they will garner more contracts and relationships with carriers across the admitted spectrum. So let's start out. Let's see what it kind of looks like. The world, so small retail insurance agents. This is where they pretty much play. They typically have a couple carriers or one lead carrier and 2 or 3 regionals to write their personal lines. Those carriers also have a good commercial line suite of BOP products, or maybe a few programs that they write in the mid-market space at best. But it kind of stops short on high net worth. You don't see high net worth carriers going into the small retail space just because they do not have the horsepower to satisfy them. Next thing you know, you go into a little bit larger agencies, mid-sized agencies, and then that's one thing I will say, since I started in '92, watching the networks evolve has been fascinating. And that allows networks to bring in some of the smaller retail agencies to enjoy and have the benefit of working like mid-sized agencies, because you now have access to, maybe like Dave just mentioned, high net worth personal lines. Middle market companies will now start offering, or what will often happen is carriers that do small commercial have middle market verticals, and they will allow the mid-sized larger agencies to access those middle market verticals. But again, now we stop short. You do not see typically these sizes of agencies getting into the super, super large stuff, or highly protected risks, international exposures, etc. That's where you might see your large regional insurance brokers, as well as your large national insurance brokers. These big brokers, the national insurance brokers, they stretch all the way across. They even probably get contracts with specialty lines carriers, or I know they do. As well as this is, as I mentioned earlier, you will see large national insurance brokers actually maybe own a wholesale broker. Just to not mention competition, I won't mention names, but you know some of the large the large wholesale brokers out there are actually owned by a division. They're just a division of one of these large companies. So that's what you see. That's where you see that's the really, really large national. So that's where I'll say wholesale brokers, MGAs. You'll see these large national, international wholesale brokers. These are the big five, out there. Again, like I mentioned earlier, they very well could be owned. They have two sides of the coin. They have part of the house that's wholesale, MGA, and the other house is retail. Mid-side wholesale firms, brokers, and general agents. This is kind of the sweet spot where you have a wholesaler that is able to do binding authority risks. They have multiple specialty lines, carriers to place your management lines, your cybers, your DNOs, your EPLIs, professional liability, things like that. And you'll see these across the plains as well of the United States. You'll see some will be regional, some will be national like we are. It just depends how they're set up. And then again, as I mentioned, I didn't know really where to put program managers on this slide. It could be over here under, maybe they just specialize in some specialty line. I know there's a program manager that specializes in tree treading trucks as they go along the highway. And you have to ask them, or like I said, it might be pollution, something like that. But I just put it there under unique because they may specialize in just one thing. So at the end of the day, as we go through here, this is what it looks like. And here you can kind of see that overlap of those large national brokers. They do what they do on the retail side. And as they grew over time, they were probably working with some of these folks, and then they decided, hey, let's just buy one or make one. And so they have both. And you very well may have access to some of the brokers that are owned by the large national insurance brokers. Almost every agent does. You see them out there. But there's also some, I'll mention some of our partner brokers out there that are not, like you look at like RT Specialty, AmWins, they're much larger than NBS, but we use them to double broker a lot of things or go to them for some of their programs. The wholesale brokerage market space is very much it's a little bit different than the retail side, that we kind of try to work together, because you never know when you might need a wholesaler to help you out with a risk, and you have an agent that just doesn't really care that it's being double brokered to another broker for that time. They just want the issue solved. So you see a lot of helping out and collaboration on the brokerage side of the spectrum. I'll just touch on up here on the top, you see that large commercial lines and specialty with high limits can flip over to E&S. That's, as I mentioned earlier, in specialty lines, the things that cause that to go from admitted to non-admitted E&S are the risk type. It's just, as I talked about with the product's liability, it might be a tough product, or it might be something, that can be written and admitted, but they want just such high limits that you might have to go to the excess surplus lines markets to get that higher liability limit. And an example would be cyber liability. Maybe you have a carrier possibly that embeds a little bit of cyber liability policy into the GL. Maybe there's an endorsement that they endorsement cyber liability under their GL for $25,000. Well, if they have a large data exposure that could get exposed and stolen or whatever, and they have to do a mass notification, it might cost a lot more than $25,000. So that would be where you might have to go to the E&S markets to get maybe, $1 million limit or something like that. So that just wanted to hit on why I kind of put that little sweeping loop over there, over the large commercial lines and specialty piece. Where does NBS fit? And this is where I'm going to kind of stop short of talking about NBS, because Jenna and Andrew will get into the details over the next 2 days. But here's where we fit. NBS, we are on this side of the spectrum. We are an admitted solution provider. Example, high net worth home. We have a lot of specialty lines that are admitted that just, do not offer contracts out into the retail world. We do have middle market. We have carriers that will match some that ASNOA have in the middle market space. If you don't have middle market admitted business or middle market access to some of your admitted carriers, we do have some markets out there that Andrew and Jenna will touch on, but we have CNA, we have Hartford that can possibly help you place a larger commercial risk if you don't have it. And I'll just show that back when the exclusive channel agents were exclusive with Nationwide before it was flipped to independent a few years ago, NBS was, for all points and purposes, a personal lines network for the exclusive channel agent. So that still lives and breathes today to an extent, but we do not have near the breadth of carriers from a regional standpoint that a network like yourselves do. So we don't really try to play in that area unless it's a singular retail agent that really needs just a little bit of help. On this side, however, we fall in as a mid-sized wholesale broker with general agency authority. So we have a pretty broad spectrum, but am I going to say, can we write the fleet of BMWs going across the ocean? There's some risk we cannot, and we do have to look to larger brokerage partners to refer agents to. But I would say when it comes to the run-of-the-mill business of the everyday commercial agent, we have a lot of solutions, and we like to pride ourselves on our service. So that's something that Andrew and Jenna will talk about in more detail about all the individual departments and how to access them. Are there any questions thus far? Let's stop. Andrew, how are we looking?
I don't see any other questions in the chat.
Okay.
I think we are good with that so
All
far.
right. I believe this is my last slide. I just wanted to stop on this and say, kind of, as I have been to conferences and observed things over the last 2-3 years, especially, a little bit before pre-pandemic, post-pandemic, we've started to go back to conferences. The management lines is probably where you're seeing a lot of I don't want to really say change, but different ways of access. Things are getting more digital in this space, easier to write. A lot of carriers are offering it through the brokers. Cyber, so my Brady Bunch reference here, cyber. It's the hot market. It is over the last 5 years, cyber has evolved from a 5-question app and hey, yeah, we'll write up to $1 million in an admitted paper to 20 questions. It's going non-admitted no matter what. If it's over $300,000, I joke a little bit there. It does depend on the risk, but it's hit more of a mature stage. So they've had losses come in. They've seen big losses. It's starting to evolve. So you're seeing higher rates, tighter underwriting, more questions, and higher premiums. So just wanted everyone to be aware of that. And it's becoming more and more written in the non-admitted space than it was in the past. Some other things you're seeing out there is you're going to hear, this is the digital brokers and insurtechs are just you hear that every day. And I just kind of want to share with everyone, digital, a lot of times what you'll see, digital brokers, in my opinion, it can be a platform that a carrier or a broker is just offering that's new. It's just digital and easy to use, and it's you access it on the internet, and it's becoming more easy for you to access what that broker or carrier is offering. A platform we have that you'll hear about, we have a platform that we embed in our thing called Clarion Door, which Andrew, I'm sure, will show you or talk about as you look at the website. It's called Clarion Door, and that gives you an ENS indication rate. So it's kind of the start of almost, it's not quite a quote to bind product, but it does give you an indication so what kind of rate you're looking at if you have a risk that needs to go in the ENS worlds. You'll see insurtechs that are actual carriers that are out there. You hear about some of the new ones that are popping up, and those are actual true carriers, or you'll just have pure digital access. That's a direct access environment. What I want to point out here is a lot of these things that you'll see people advertise are also embedded within wholesale brokers. We have a lot of direct access digital companies out there that you can access right through our direct access page. They'll go over that in the next coming days. We're seeing a lot of success with that. And they're using brokerage to help access distribution. So it's kind of confusing out there, in my opinion. I hear a lot of it's interesting to read about a lot of them and see where they're going, but you can access a lot of them through brokers. Some of them you can go direct yourself. It just kind of depends on where they're at. Some loss challenges that we're all seeing out there, I'll just share. It's not slowing down. The wildfires we're seeing, heck, I read there's a wildfire. I didn't know New Mexico could even have wildfires, but there's, fires in New Mexico, Oregon, Washington, California. What we're seeing in Florida right now and some of the coastal carriers, the tightening and closing down of coastal companies, it's getting tough. It's getting hard to insure things. I don't have answers for this presentation. I just want they just know we understand the frustration. We're frustrated, but we may not have markets in some situations when it comes to coastal. And obviously the ever, making sure we keep on top of the ever-changing landscape of regulations. So just some things kind of just to close out on with this last slide. And I think that's it. I'm just going to open it up to any more questions to kind of close out here. Man, I almost did an hour and 15 minutes. I was spot on, Laura.
You were. So Andrew's been typing away, answering questions in the chat. If anybody else has any more questions, feel free to raise your hand, ask them in the chat. We would greatly appreciate it. But if you do think of any other questions, you can always email them to me and we'll get you in contact with Brent, Andrew, or Jenna. Or you can ask all those questions that you think of later on today in tomorrow's session as well. So
Laura, I will say, I would like to jump in. I scanned some of the questions. When you do call the broker on that tobacco shop situation, there is, and I cannot quote it, but when it comes to the CBD and you're seeing this, again, I probably should have put that in my last slide, the evolving market of cannabis. We're still staying pretty far away from, the retailers of the cannabis, but if it's CBD and it's under, they have like numbers. If it's under a certain amount of THC and whatnot, there's some guidelines to that. So definitely call a broker and see what we have for pure CBD that has under a certain threshold of THC in it.
all right. Well, that is great. Does anybody have anything else? And who asked that question? Mary, do you have anything more to ask on that question, or was that good for you? I can unmute you if you need to. All right, we'll let her chat back in. Well, thank you very much, Brent. That was amazing.
Well, I hope it wasn't too boring, and I hope someone learned at least something. And again, I just like to thank this group on the whole for, as Andrew and I've been working with this partnership, it's been a joy, and to see the production that the ASNOA group of agents have placed with us and continue to place with us and have confidence in us. Just can't thank you all enough for your business, and we wish everyone the most success and have a great summer. Hopefully we'll get into like maybe some normal summer weather.
Yeah, right. We do have one question. Jay-Z asked, what are some markets or products where you are seeing high success with retail agents?
So surprisingly, it's going to sound like a pitch based on what Brent was talking about, but right now we are writing no less than 50% of any application that comes in the door in the pollution lines. It's really one of those classes that we've got good markets and agents that come across those, whether it's a contractor being the small, one guy in a lunch pail, all the way up to, a larger construction account. And then any of those businesses like convenience stores, gas stations, propane distributors, those are areas that we are playing quite nicely in the pollution lines. When we talk about the general stuff, it is really as wide as the market is. We've got a good breadth of product, and where agencies find success with us are really when they can't get their hands on that account or get that account placed with a market for whatever reason. Tomorrow you'll hear me say the phrase a lot, NBS is a gap filler for your agency. And if you have a market that'll do it, great. If not, NBS is usually able to plug in. I don't want to say success can be surprising, but sometimes we are rather surprised at what we see come in the door and that we're able to place competitively and quickly. But what we could do also is take a look at your area and try to pull like a hot sheet or a top 20 list. Sure. Of what we've done over a period of time, just to give you some kind of an idea of what we can be successful at.
Yeah, where I'll jump in on that, and what's interesting about that question is, I can tell you I can tell you in the E&S space, for example, what you're seeing. Hotel motels are getting tough. Non-franchise convenience stores and grocery stores are getting tougher. Where that used to be a popular class they'd write, but on the E&S side of the house, what you'll see you have a lot of success with is, it'll be those typical E&S. Someone mentioned tobacco shop, restaurants, bars, contractors that are startups. That's a lot of things that go in E&S. I should have probably said this earlier. A lot of things that go into E&S are also risks that really, from a class standpoint, qualify for admitted markets, but they're new or they're startups. So the E&S, they have to do a little time, if you will, in the E&S world. But we also have markets that are kind of at that hybrid ground that are willing to take a stab at some of those startups. That we'll talk, carriers like USLI and Hiscox and things like that. So we have such a broad spectrum to tell you where we have success with. I would tell you it's not about what we write in E&S, but the service. You as an agent, or E&S typically is a situation where you need a solution quick, you need a rate, you need to be able to provide something to the insured because they're running out of options. But outside of that, where we're unique from this is where we're unique from other wholesale brokers. If you remember that slide where I had us on the left side where you guys are, we help agents place middle market. We're seeing a lot of success in middle market, where agents have small market risks, or they may have, or they have carriers to write small risks, but they don't have that. You have a commercial agent that's fairly good at commercial lines, and they happen to have an opportunity to write a $300,000 account or a $500,000 account, but they do not have a middle market carrier that will do it. Josh Adkins' team at NBS can do it. They have the ability to write with some of those national carriers for those larger accounts. So that's where we're seeing some success on the admitted side. Andrew mentioned pollution on the specialty line side. We're having a ton of success in all of the management lines places. We have lots of markets for that. And it's really just all over the board. But when it comes to those typical traditional E&S classes, I would just tell everyone, give us a try, work with a broker. The more prepared you are, the better the situation is going to go for you. And I also tell you just this, because I also tell our brokers this. Both of us are guilty of this. When things start to break down, demand a conversation and pick up the phone. I think both sides, and carriers, brokers, agents, we're all relying too much on email. And sometimes we need to get up and pick up the phone and talk to somebody. And if you ever can't get somebody on the phone at NBS and you've tried and tried, call me, call Andrew, call somebody in business development, and we'll make sure we get to you. But that's something I see that I'd like to see everyone in the distribution line get better at is talking to each other more.
Yep, picking up the phone.
Yep.
Absolutely. We say that a lot over here at ASNOA. Always, if you can't resolve this issue, too much back and forth with an email, just pick up the phone. Great. JZ, did that help and answer your question? Tons. Perfect. All right. So thank you very much. There you go, JZ. Perfect. All right. Thanks, Brent, Jenna, Andrew, for jumping on today, giving us all this information and knowledge that we need to help grow our agencies in this wholesale market. It seems to be something that people need to know, and you gave us all that information. So I thank you very much for that. Real quick, I just wanted to let everybody know. Can you see my screen? Yes. Yes, thanks, JZ. Okay, so wholesale override. So when you are issuing a piece of business with a wholesale market, if you receive that commission, you need to enter that in policy into Epic it's not going to download. So you're going to need to manually issue that policy. And then you need to send our accounting department that statement that you received so they can process that override of that 15%. We'll go into more of that on Live with Laura on May 24th, but I just wanted to throw that out there so you guys are well aware of that. And I know that you are all doing that. So thank you very much for sending in those statements. All right, so that is the end of today, and I want to thank you guys all for jumping on. I know Brent and Andrew and Jenna are so excited that you were here today, and we will see you guys tomorrow. Remember, bring all your questions for Andrew and Jenna. They are ready to help you guys.
All right, thanks again, everybody. Thanks, Laura.
Yes, you're very welcome. Thank you for everything, you guys. I greatly appreciate it.
All right, take care.
We'll see everybody tomorrow.
Yeah.